The Greater Vancouver Real Estate Board just released the stats for the month of September, and I'm going to go over some of the key points and what it means for you. Now, as far as sales are concerned, there was 1,926 sales in the month of September. That's a 13% increase year over year. That being said, we are still 26% below the 10-year average. Contributing factors, they have not changed. Obviously, mortgage rates that are higher than we've seen in the last 10 years have some sellers a bit reluctant to get their house on the market, as well as buyers who are rate sensitive. They can't afford what they need, which actually currently fits their lifestyle, or they're just unwilling to make lifestyle adjustments and they're better off renting. Now, as far as inventory is concerned, we saw a significant bump in available inventory, about 28%. That being said, we're still 6% below the 10-year average, which explains why some product in some area are seeing better turnover than others. Now, as far as the market condition as a whole, we are trending towards a balanced market. All property types saw a 17.7% sales to active listings ratio. To put that into terms that you might understand a little better, when the market experiences 12% or below for a significant amount of time, we see downward pressure on prices. When we see 20% or higher over a long period of time, we start to see upward trending on prices and values. So sitting at 17.7% right now makes sense considering the season we're in. And you know what? It's just more of a balanced market as a whole. Now, as values are concerned, benchmark price for all property types in Vancouver was 1.2 million, and leading the way in the sales columns was apartments, followed by the detached sector and then townhomes. Now, apartments values there 768,000. Again, that's the benchmark price. Detached homes, that was 2 million, just over 2 million, and your townhouses was just under 1.1 million. The reason why I think, or there's a variable factor to apartments leading the way, is maybe some investors are offloading their investments because with the current interest rates, it's very hard to have a cash flow. It's almost impossible. So some investors might feel stretched and they might want to get rid of some of their properties, which is putting more apartments on the market for buyers. Now, where do we see the opportunities? Well, as a buyer, I see an opportunity whether you're in the market right now, upsize or just get into the market. Maybe there's some areas that you could not afford previously that you can now. Look at the numbers, make some short-term lifestyle changes because we all know people love cheap money and expensive real estate. So once the rates come down, people are going to flood the market. Now, if you can make some minor lifestyle changes in the short term, you're going to see great equity growth and maybe move up the property ladder quicker than if you just waited for the rates to come down. Now, as a seller, I think you got to look at the actual numbers. Depending on when you bought, where you live, there might be an opportunity for actually move up the market. It might be one of those pockets I talked about where there is actually high demand and low inventory, and you will be surprised at the value of your home.